What is a stock options? Disclaimer, I am not a financial advisor and this is not a financial advice. This is my opinion, my interpretation of the definition of a stock option. There are hundreds and thousands and millions of definition, informations, good materials all over the internet, YouTube and all. If you guys disagree to what I am saying, my interpretation and opinion, respect, no problem, go ahead. I am trying to oversimplify, in my opinion, my interpretation, what is a stock option. And in my definition, stock option is gambling. No, I am not being sarcastic. In a short, what is a stock option? Stock option is gambling. There is absolutely no difference between gambling and stock option. This is my short definition. And again, this is my interpretation, my definition. Now, if you want to stay a little longer in this video and want to hear more about it, in my again opinion, stock option is like a non-refundable reservation fees. You pay a fees for reservation which is non-refundable. So stock option, in my opinion, is a non-refundable reservation fees which you pay to buy a stock of a company or whatever it is, I mean ETF or whatever indices. You pay that non-refundable fees to buy that stock in a future date, time bound, and at a particular price. That is a price bound and a time bound. You pay one time charge which is non-refundable and to buy that stock within a particular time frame at a particular price. And that stock option, again I am talking about US stock option, means you can buy 100 stocks. For example, this is just an example, okay, a stock say ABC. Now current fair market price of ABC is $100 even, for example. Now again example, I pay $10 and that $10 payment is known as premium or a non-refundable one-time charge reservation fees. I am paying that $10 to buy this ABC 100 quantity of stocks within say 1 week and at a price of say $120. Again, I'm just making up an example randomly. I'm not prepared anything, I'm not articulating properly. So one time payment is $10 and I pay this to get an right. If I choose to exercise that right, that's fine. If I don't choose to exercise that right, is also fine. But I pay that one time non-refundable charge of $10 to have buy a right in future, which is a 1 week in my example. The current stock is trading as $100 to buy 100 quantity of the stock to buy within 1 week of that ABC at $120, for example. So I reserve that right. Nobody will force me to buy. No, it is not a forced, it's not an obligation, but I reserve that right for which I am paying a premium of one time non-refundable charge. They say it's a premium, one time non-refundable charge of $10. Regardless that $10 is non-refundable. So I pay that to reserve the right to buy that stock ABC at $120 or not within 1 week. If within 1 week it has become $150, $121, $122, $200, still I reserve the right to buy at $120. You guys understand, right? So that non-refundable charge is that power to buy that stock within 1 week, at any point of time within 1 week, at any point of time, any day within 1 week, to buy at $120. Doesn't matter if the stock goes up. Nobody will force me, but yes, if I buy, I will be profitable. Now, if the stock goes down, again, nobody will force me to buy that. That $10 is one time gone. So that is, in my definition, an option is, in a layman's language. Once again, this is my interpretation. You might agree or disagree. There are a lot of better materials in this market and the internet. You can learn what is an option, but this is my interpretation, what option is. Thanks for watching. See you guys in the next one. Bye. Peace.